Hey guys, Tex here. Welcome back to the channel. In today's video, I want to take a look at the market. We're going to go over the technical analysis of the indices and take a look at a handful of stocks that we like to trade. And I'm just going to give you my thoughts on where we are in the trend and what I'm looking at here. Also, the fundamental picture. We'll take a quick look at the econ calendar for next week, which is actually a short week because of Easter weekend. The market's going to be closed on Friday for Good Friday. So there's a chance we could have low volume trading next week, but that doesn't mean that the market can't make big moves. If we start seeing some big option levels broken, of course, that can bring in a lot of forced buying or forced selling. It's really going to force people to start doing things, and that can move markets. So with that said, guys, I always appreciate you tuning in. Let's roll the intro and get started. All right, guys, so welcome back. Now, just real quick before we jump into the technicals, here is the econ calendar for next week. We have FOMC member Bostic speaks on Monday. There's always a chance that could move markets, not like a true FOMC day, but just keep that in mind. He speaks first thing in the morning on Monday. Looks like Tuesday, Wednesday, we have core CPI numbers, and Thursday we have initial jobless claims. So there is some catalyst for next week that could move markets. Of course, as I mentioned, the market is closed on Friday. So we'll keep that in mind. And then earnings season is going to start kicking off next week. The big banks, JPM, Citigroup, and Wells Fargo are reporting, among a bunch of other companies, of course. And then the big tech names that we like to follow, Apple, Tesla, etc., will be coming shortly thereafter. Okay, so starting out with the S&P 500, as usual here, we're going to look at this weekly chart. And I made a video 3 or 4 weeks ago, and we'll just kind of get this all in frame here. It was this weekly bar right here when I made that video. And the reason I made the video is really because I saw this as significant. It was the first weekly bar that we managed to close below the positive slope that we've held since the pandemic low. So back in March of 2020, here's the COVID pandemic sell-off. This is the low, and the incredible rally that we had off of that low, helped by the incredible stimulus that the Fed injected into the economy. But that is coming to an end, right? We have high inflation now as a result. We have the Fed that's forced to raise interest rates. They're cutting back on their balance sheets. You know, the era of free money printing basically is coming to an end for now. And obviously the market is repricing that in. It's a very negative thing for the market, and I think that there is a real possibility that we could see a sustained period of lower prices. I'm not saying that the market's going to completely crash. I think that we could see a correction that lasts for some time. But the bulls are relentless, so I do want to keep that open mind. There's still a chance the bulls can save it, but I have some lines in the sand for the bear and the bull case, and we're going to look at that in just a minute. Now, I just want to just kind of dive into volume profile here. I touched on it in that last video I made, but as you can see, we have this massive volume pocket here, and what does that tell me? If these lows here break, if we come back down to these lows and we break these lows, we're going to fall through this volume pocket really quickly. I just don't see anything stopping us. So we get to 3,900. We got a Fibonacci retracement from the pandemic low to all-time high. That 38.2 comes in right about that area. But to retrace half of this move off the pandemic low, we'd have to come all the way down to 3,500. Now, again, I'm not saying that's going to happen, but should it happen, it's something to keep in mind. You know, it's a nice whole number, 3,500, 50% retracement, and you've got the 200 weekly moving average coming up to that area. Of course, it's not going to get straight down there if we get down there. So we'll have to revisit that and see how the technicals are lining up at the time. But that is kind of like where we could be going if we do see these lower prices and a prolonged market correction. Now, I want to zoom in on the price action here, and I want to look at the volume profile on an intra-bar basis, or I guess a weekly bar basis. So again, here's the weekly bar. I made that last video. Look at this nice volume distribution we had on that bar. And then I mentioned that, you know, we want to keep an open mind. There's a chance the bulls come in the very next week and reclaim the positive slope. This little orange line here is the positive slope. You can see this weekly bar close below it. Well, what did they do? The very next week, they reclaimed it and they just ripped faces off. Well, look at the volume distribution on this weekly bar. It's very thinly spread out. So what is that telling me? Obviously, that was a lot of short cover. You get these rip your face off rallies whenever the market has corrections like this. This is not uncommon price action behavior. And you can see that we're actually setting up a lower high reversal pattern here. Okay, so if this plays out the way that the fundamentals are indicating that it should, and the way that the technicals are indicating that it should, I'm looking for lower prices. If we break below last week's low, I just don't see a lot of volume here on this weekly bar that is going to stop us from coming down any lower, at least to 4,300. This is going to be the first weekly level here for the bulls to really kind of step in and save it. If they want this to be the low, and this is going to be a higher low as far as the weekly levels go, I like that 4,300 level, and you get the bottom of the positive slope sitting right below that. If we start breaking below that, these lows are definitely going to be revisited. Could we double bottom on those lows? Sure, we could. If anything, there would be probably a short-term bounce there, but I would suspect that those lows are probably going to break if that happens. If we get back down there, I'm probably going to be looking for newer lows. And again, as I mentioned, the levels below that we'd be looking at 3,900 and then even lower if that plays out. So I think for next week, from our weekly level perspective, 4507 is going to be a key level for me, all the way up to 4550. I think the line in the sand for me, as far as the bear case goes, is 4550. We have to stay below 4550. If we open below 4507 and we retrace next week into 4507 and reject, I think that's going to be a good short entry to the downside, targeting at least the 4300 area. But we could get all the way up to 4550 and still have a valid bear case. If we go look at the 60-minute chart here, this is what I'm looking at, right? So here's our pullback. Here's the rally, right? This is where there's just very little volume here, where just this force buying comes in, short cover comes all the way up here, and now we have this pullback. So could the bulls save it here? Could this be a higher low? And could we rally back up? Absolutely. That's why we have to have this line in the sand. So the weekly level is 4507. The hourly level is 4539. So really 4540. That's going to be the line in the sand for me for the bear case. If we start trading over 4540, that's going to be, time to think about going long instead of short. Okay, so we'll see how we open. Now, if we open with a gap down, if we open below this week's low, then I think that that's going to be very indicative of the bear case. Now, I would suspect that depending on the size of the gap, that there's some type of a rally, at least in the morning, into that great short setup. So we'll keep that in mind. 4507 to 4540 are going to be my key levels for the short thesis on the S&P 500. Trading above those, and I think the bulls are going to start taking control of things. Now, as we look at the 60-minute here, when we zoom out on this, obviously you can clearly see the trend. Here's the pullback, rejecting below the 200 moving average. We reclaimed it. There's every chance that the bulls could still come in and save it off of this 200 moving average here on the 60-minute. So we want to keep that in mind. As of right now, it's probably going to want to draw price down to it. You can see in the past, whenever it comes down to retest it, it tends to break it and then reclaim it. So if we break it and reclaim it, that would probably line up pretty nicely with the weekly. 4327 is the weekly level. Let's go back and look at that 4327. Yeah, that would that'd bring us somewhere down in this area. So, and that would still be above the bottom of the positive slope here. So I think that, the bulls could still save it, but I think that at a very minimum, we're going to see lower prices from where we are right now. So let's keep that in mind again and see where we open up. So that's what it looks like on the S&P 500. Let's pop back over here and take a look at the Nasdaq, because the Nasdaq is showing a lot of hugely relative weakness compared to the S&P 500. It's, of course, a very tech-heavy index, and tech has really been struggling at the end of the day. Look at the big weekly bar breakdown here. Not only did we close below the prior week's low, but we closed below the 9 EMA. I think that really we don't see any hope of a bounce for the Nasdaq, at least until 13.8, and even then I would be questioning that. So why is it so weak in the Nasdaq compared to the S&P 500? Well, for that we can go take a look at our sectors. So here's your weekly charts for your different sectors. You have the semiconductors here. Look at this big weekly bar breakdown. It's already broken the higher low potential. So in my opinion, the bulls are just nowhere to be seen here. Could it double bottom off these lows? Sure it could, but I don't think that that's likely. We will see what happens when it gets there. Here's your technology sector. It's coming close to the higher low setup, but again, look at the reversal pattern here on the weekly. I mean, this is all indicative of lower prices. However, look at things like healthcare, right? Healthcare pushing up into a new high, a nice strong weekly bar. Also, let's see, consumer staples, right? Look at this, nice strong up week in consumer staples. Look at utilities down here, nice strong week. This is actually the third strong week up in a row for utilities. So these are your defensive sectors, right? So you see money coming out of growth and tech names and going into safer havens, so to speak, your defensive sectors. This is completely normal. And this will cause that push-pull effect in the S&P 500, where the Nasdaq is very tech heavy. As long as tech and growth stocks are weak, the Nasdaq is going to be weak as heck. But the S&P can still be relatively stronger than the Nasdaq, right? It's still weak, it's still selling off, but it didn't look as bad on the weekly as the Nasdaq because you have these other defensive sectors that are helping to kind of prop it up a little bit as you get that rotation. Now that we've had this big run up here in utilities and consumer staples and healthcare here, if these kind of take a pause or they pull back and tech remains weak at the same time, those are the days when the overall market will be incredibly weak because you have every sector that's selling off. Those are the days where there's not going to be any bid and the market internals will look absolutely atrocious. If we go take a look at the internals, you can see that the VOLD SPD has been incredibly negative on quite a few days. Let's blow this up. Obviously we have a lot of these big rally days, but look at all of these days where it's just been weak right from the open. Opens at zero, boom, zero down, zero down. So it's obviously with a rotation that's gonna vary. But what I'm seeing here is that the internals are showing a lot of weakness as well. The VIX is still over 20, spiked up to 25 here, really just kind of pulling back into a higher low here. If we start to see those lower prices in the S&P, the VIX could easily start spiking back up here to 25 again. So we'll see how that plays out. Again, I just want to keep an open mind here, but the line in the sand for me, as I pointed out in the S&P 500, is that 4507 area on the weekly and 4540 on the hourly. Now the 10-year yield is obviously climbing, and that's bad for tech and growth, right? So the more that this continues to climb, the further weakness we're likely to see in those tech stocks and the Nasdaq and whatnot. So we're at 27 now. If we start getting up closer to 30, I just see that as being really bad for the market, guys. So all of these things we certainly want to keep in mind. Now, I didn't really get a chance to look at the monthly charts because I made the video before the close of the month, and obviously we're at the beginning of a month now. But if we look at the S&P 500 here, this is the close of the last month. We had that nice rally off of the lows. We were not able to close the month in a new high, right? So this month opens, and we have a reversal pattern setting up here for more lower prices, for more move to the downside. Okay, so the monthly chart is also supporting that. Now let's go over and take a look at our dailies here. So here's our daily for the S&P 500. And this is why I say I think we're kind of at a decision point here for the market, because just purely looking at the daily, you can see that we are currently wedged between the 9 on the top. That's the 9 EMA overhead. You got the 20 SMA below, and you got the 200 SMA sitting right in the middle. Okay, so we're kind of at a decision point. The market's going to have to make a decision. Are the bulls going to save it here and start pushing it back up where we had this double top rejection here? You see we tried to reclaim it here, failed, came up and tested it, and then again failed, and now we've put, we're back down below that. So that's a big level. This is definitely going to be a big level overhead, that 45.87 area. But I think, again, for the bears, if we start getting over 45.50 again, I think the writing's going to be on the wall, and if we come back up to this double top area here, I would expect it to break this time around. I don't think that's going to happen. I'm leaning more on the bear camp, but again, I want to keep that open mind. So we got to make a decision here. We're kind of stuck between these moving averages. I would say lower prices is more likely, but we will see how the market opens up next week. Taking a look at the Nasdaq, I mean, obviously a very different picture, right? It's well below the 9, below the 20, and actually just closed below the 50 as well, and well below the 200. So again, indicative of that relative weakness that we're seeing in the Nasdaq and tech and growth overall. All right, so that's a look at our indices, our sectors. Let's just take a quick look at a handful of stocks that we like to trade. I'm going to take a look at Amazon here. Let's switch this over to a weekly chart. And if we look at this, look at this breakdown bar here, this weekly bar, really big breakdown bar there on the weekly. When we look at the daily, we're trading right into the 50 moving average here on the daily, starting to get a little extended from the 9, but not really enough just yet to, kind of get excited for any kind of counter trend longs. But I do like this 3,000 area. If Amazon can get down to 3,000 next week, certainly if I was short, that's an area where I'd be taking profits. But I think that there's a good chance we'll get some type of a short-term bounce off of 3,000, at least for some day trades. I think there'd be some good trades off of 3,000. So it's a big technical level there on the weekly, and you also have math lining up at that level as well. So really about 3004 to 2985, you got two math levels lining up around that 3000 area. So if we could get down there relatively quickly and we could see this nice extension here on the daily continue down to 3000, I think that'd be a really high probability area to capture some type of a nice long trade out of it. Otherwise, if we kind of open up flat and we get that rejection off of you can see here, obviously, where we had this leg down, a little bit of consolidation here in a pretty big range. If we open up pretty flat and we get this rejection off this 3,100 area, that could be a good short for, about a nice 100-point move down to 3,000. Okay, so I want to keep that 3,000 on watch for Amazon next week. Again, it's all going to hinge on how we open up. So we will see how that plays out. And then take a look at NVIDIA and Tesla. These days, this is really the only three stocks that I trade, and then I trade exclusively SPX. Okay, so NVIDIA, look at this weakness in NVIDIA. Obviously, that playing out with what we saw in the semiconductor index. We are currently trading into a possible daily support level and as well as a weekly support level. We're actually below the weekly level. So once again, it's going to hinge on how the market opens up. We're starting to see some nice extension here on the daily. If the market could open with a decent sized gap down, these names like NVIDIA and Amazon that have had these extended run down on the daily, I think they're going to be high probability bounces, at least for day trades. If we open up flat, then obviously we're going to have to wait and see how price action dictates the direction for that day. But I think for NVIDIA, really, you're going to be looking at 222 area. And then after that, the 210 area. I actually picked up a swing trade off of this bottom here. This was actually a prior all-time high. Big breakout level here where it held 1, 2, and then I caught it on this third time here. Got the all out signal here on this reversal sign there. Captured a little over 30% on that. Here lately in this market, I'm not spending a lot of time in swing trades and investments, other than my core investment holdings, just because, again, the macro picture, supports that we're probably going to see lower prices. At a minimum, the chances of us seeing significantly higher prices for the next year or so is not very good. So that was a great trade. Now, if we come back down into this 208 area, probably going to have a lot less confidence in that level holding this time around. That's going to be 4 times that it tests that level. It depends on how it comes into it. Obviously, if we're very extended when we come into the 208 level, I think it'd be a good short-term bounce trade. But if this weakness in the overall market continues, I would expect the 208 level to break. So I don't think I'll be really looking for a significant investment or swing trade off of 208 if we get back into it, but maybe a day trade. So as it stands where we are, again, we'll have to see where the market opens up, but I'm going to be looking at somewhere around the 223 area for the higher low, and then maybe 208 if we get all the way down there for NVIDIA. A lot of weakness there, obviously well below all those moving averages. And then the last one to take a look at here is Tesla. Look at this rejection off this trend line, guys. Just absolutely beautiful rejection right there. So when we look at the weekly chart, look at the significant gap here. Now, I realize that we've already filled this gap. This was a big gap up from this week to this week, and obviously we have since filled that gap. But anytime you have these major gaps like that, those levels are always going to be respected. So it's something to keep in mind. And the longer the time frame the gap is on, for example, this is on a weekly, it's always going to have a lot more weight. Okay, so that's just something to keep in mind. Now, I like this 944 level because it was so well respected, because it was a gap on the weekly. And I also like that it's kind of lining up with the 9 EMA and the 20 SMA here on the weekly. So you kind of have some moving average support should Tesla get down there. Let's take a look at it here on the daily. So where we are right now, obviously we had a gap up from here to here. We have filled that gap this week, and we managed to close the week right on that support. So I think this 1021 is going to be very key. If we open up below 1021, on Monday and we can get some type of a pop into that for a short entry, I think that'd be a great short entry. I'd be targeting 994. You've got the daily 20 SMA coming up around that 994 area. You're also going to have some math levels coming in there. Obviously, you can see where you had some pivot support and whatnot there. You also had a breakdown and a rejection of that 994 level. So I think that, obviously, if we can get a short off of 1021, 994 would be a good target. Now, if we open up over 1021 and we hold that as support and the market shows any signs of bouncing, that could be a good long off of that. I'd be targeting 1053 to the upside, where you also have that daily 9 coming in there as well. I think the more likely scenario is probably going to be a short off of 1021. We'll see how that plays out. Now, the 944 is the big level on the weekly. You can see here on the daily. It also is a gap here on the daily right there. And you can see all of this resistance right here in this area where that 944 was just a huge, huge level. So I think if we can get down to 944, obviously that probably takes some time, but if Tesla can get down to 944, that would be a great long to consider right there. Now, the math lines up with those levels as well. As I said, 994 would be the target for the short. You've got a math level at 981, and then 944, you got a math level here lining up around 953. So that's it, guys. I hope the video was helpful. As always, I do appreciate you tuning in. Hope you guys are doing well. Take care, and we'll see you in the next one.